Illovo has extensive agricultural and manufacturing operations in 6 African countries and is a 51.5% owned by Associated British Foods. It has a market cap of 9.7 billion rand, a price to earnings ratio of 12, and has no dividend yield at the moment. So Illovo is a big African story. I think it's about 80% of their production and earnings comes from Zambia, Malawi, obviously part of that big sugarcane belt that flows around the world. This is more a pure sugar play compared to Tongaat.
But I mean, it's virtually exactly the same factors. In fact, when you look at their management commentary, you don't know whether you're reading Illovo or Tongaat, because they are so similar and they are affected by exactly the same issues. The European Union story, etc. And also when you read both of their management statements, it's just cost cutting, rationalization, efficiency. You know, this is not it's not a growth industry, it's a heavily cyclical industry, as we've discussed already, and this is the true, and Crooks are the true pure sugar plays.
And we already know that, we agree that sugar prices are going to be quite volatile, and this is almost like it's a single commodity type stock, so it's very influenced by that. Those operations up in Zambia, Malawi, I mean, what's the operating conditions like?
They're actually very good operating conditions, because sugarcane, all you need for sugarcane to grow sugarcane is heat and water, and they've got that. So there's actually very, very high crop yields. In certain spaces, you can get 2 crops a season, whereas in South Africa, the overwhelming majority is only 1 crop a season because it just gets too cold in winter. So it's ideal sugar growing conditions. And the companies have been established there for a long time, and the actual operating conditions seem quite reasonable. So I don't think that's a negative as the Zimbabwe is. I don't think the other countries are as much of a negative on the companies than what it is on Tongaat.
And in terms of expansion plans going forward, I mean, do these guys have any plans to possibly buy more land and convert it to sugarcane plants? I know sugarcane is pretty destructive on the land that they use. There's lots of runoff into rivers because the sugarcane doesn't actually hold the chemicals and the fertilizers. You know, in terms of further expansion and growing their crops?
Look, they're all trying to grow, but at the moment, no one's growing at the current sugar price. So you've got to wait until the sugar price recovers before there's any more big capital put into it. And of course, there the big competition is, you know, it's beet sugar as well. That's big competition. And then also Cuba and South America, Brazil, I've just got so much more scale than us that if they have the drought, the sugar price will double. But if they have a surplus, the sugar price will halve again. So it's very difficult to actually do.
Out of their control.
Yeah, it's very difficult to do.
Let's look at the share price. I think you can see there, like you mentioned, similar to Tongaat, pulling back quite heavily on the back of the sugar price.
Look, I suppose if you're prepared to take a risk, I mean, it's more than likely the sugar price is going to go up, because it is, as we've mentioned many times now, very volatile. So if you want to take a bit of a risk, maybe buying it, but long-term investments, these stocks are just in fact too risky.
So you're leaning towards not hot, I'm guessing?
No, not hot,
yeah. I agree with you. I can't be not hot on Tongaat and hot on this one.